Hello, everyone. So, extending our discussion on equity research on the research analyst module, we have a section on how a good research report looks like. So, today I felt like discussing one of the reports which was recently published by Motilal Oswal Financial Services. I hope you all know what Motilal Oswal is all about and what it does. And some of you may even be interested to be a part of the firm, right? So you should always read the disclosures. You should get an understanding of the investment rating rationale provided by the organization and in how much returns or what is the range of returns that they consider to give a buy, sell, neutral, under review, or not rated recommendation to a particular stock, right? And it also mentions more about the company and the respective analysts or people who were involved in preparing the report. So today we are going to talk about a very famous and a well-known brand, Zomato, which I'm sure all of you have an app installed in your phone. Either you use Zomato, Swiggy, etc. to order food online, and hence the sector that it belongs to is internet. If I show you the website of Zomato Investor Relations is a section or a segment of the website of the company's website which takes you to the financials. So if you ask me which is the most important source of information for an investor or for a research analyst, definitely it has to be the annual reports, the quarterly results, and the archives. When I say the archives, it means the consolidated financial statements, the standalone and the material subsidiary of Zomato that have been there historically and were published by the firm on their respective website. So today, let us look at the annual reports, but at the same time, you must additionally look at the earnings call replay, the earnings call transcripts, the con calls, the KPI data book, companies overview, and others. So others may include any mergers and acquisition activity that has taken place, acquisition of Paytm's insider ticketing business. So proposed acquisition of the Paytm's entertainment ticketing business dated August 21, 2024. Again, this is an overview you can read about, right? So Zomato is in talks with the Paytm's entertainment ticketing business, which is actually used by customers to discover and purchase tickets for movies, sports and events. आपने देखा होगा कि जोमेटो पे आपको किसी कॉन्सर्ट, किसी मूवी की टिकट भी मिल सकती है. वेल, रिसेंटली वन ऑफ दिस इवेंट हैपेंड. लेट मी नो इन द कमेंट सेक्शन दैट कौन से इवेंट की टिकट आपको जोमेटो पे अवेलेबल थी. Right. So let us stick to our discussion and talk or understand more about the annual report. So the latest annual report that is published is FY 2024. So FY 2024's report is opened, which means it is the annual report for the year 2023 and 24, which means you will find the financials for March ending 24 and March ending 23. So this is something that I want all of you to read at your own discretion. And these are some of the sections of the annual report. And I would like to tell you that you should focus more on the financial statements available so that a report makes more sense to you. But since a report is already published, let us first go through it, try and understand such terminologies. And if you have any questions regarding the sections of the annual report, feel free to connect with me personally over the comments below, and I will be happy to discuss that further. Right. So a couple of things that you must notice and note down about the report is the date of the report. So the report date is 9th of February 2024. That means it's older than 6 months, but still doable and belongs to this year. Try to find more reports which are more recently published. They would definitely be quarterly updates, or if it was published around April, May, June, etc., it may also be for the year ending March. So try to find those reports. As on this date, the current market price of Zomato was INR 144. The TP or the target price for this stock is 170. Now let's quickly check how much is Zomato trading at. Okay, so it's 276.70. So do you think as per the report, the target price has already been achieved? Yes, the target price has been achieved from the February expected targets. So, as per Motilal Oswal, the estimate change is positive, target price change is positive, rating change has remained the same. So, this symbol indicates neutral. A symbol on the upper side indicates a growth or a green. A symbol on the downside indicates red or degrowth. So, here are a couple of summary points after the research analyst would have read so many sources of financial information available. They must have gone through the website, they must have gone through the news articles that were published to arrive at this report, and would also have internal databases to check for the factual accuracy of the same. So the Bloomberg terminal is Zomato in. The number of equity shares in million is 8604. Market cap is provided in INR and USD billion. Well, what is 1, 6, and 12 month of relative performance percentage and 12 month of average? This is something I would like to cover in the next video because this is important, and as a concept, do wait for some discussion on it by the end of this session. 52-week range is nothing but the lowest and the highest price in the last 1 year or 52 weeks. Now, here are some financials and valuation metrics, valuation percentages and ratios available at your discretion. Again, these are estimated numbers. Historicals would ideally be provided at the end of the report as a table, right? So here you would be able to find some understanding on Zomato delivering another good quarter with third quarter of FY24. So third quarter of FY24, considering that the company follows April to March, should be. So first try and decode what should be the third quarter for a financial year 24. Well, for the financial year 24, it must have started as quarter one for April, May, and June should have been the first quarter. Then July, August, September as the second quarter. October, November, December as the third quarter. And finally, January, February, March. So this relates to the September, October, November, December quarter. So October, November, December is the third quarter of FY24, and hence the report was published in February 2024. But now that we know that we are somewhere in October, we would also have the quarter four financials available, and also the annual report is available, which is here that I had just navigated on the company's website, right? So FY24 annual report is also available along with the FY, all the 4 quarter reports. So this is a little older report, but for your understanding, you can definitely try and get a grasp of how do you read a report. So I just wanted to brief you about the sections that you must find in a report. Have a look at it and also incorporate the same when you prepare a equity research report, right? Right. So the net sales, by the look of it, we are expecting the net sales to grow. The change is expected to be 70%, 41%, 35.5% as compared to the last year. EBITDA margins, adjusted PAT levels, the PAT margins. So all the margins are nothing but they indicate the profitability ratios. Margins are nothing but a percentage of net sales. So all the margins are represented as a percentage of revenue. EV upon sales, EPS. EPS is earnings per share, right? So quickly, can you recall the formula for earnings per share? It was PAT or net profit minus if there is any dividend paid to the preferred shareholders divided by the weighted average number of outstanding shares. Then we have price to earnings ratio, we have price to book ratio. So these kind of topics help you understand that what is important from the point of view of a broker, that they must have felt to incorporate it in the report. And these concepts become a starting point for you to read more about and get a good understanding of it, also from the interviewer's point of view or from the recruiter's point of view, right? What is shareholding pattern? When shareholding pattern is a percentage stake that a particular investor or a owner or a domestic institutional investor or foreign institutional investor holds in a particular company. So if you look at the shareholding pattern, do you think there has been a major shift or a significant change in the shareholding pattern? Preferably not. If we see there is a slight dip in the shares, number of shares held by the FIIs. However, DIIs have increased their share in December 23. So a lower shareholder pattern, or when the number of outstanding shares held by the promoters fall drastically, that may be a negative fundamental factor to look at, right? And I had also discussed about this in one of my videos where we talked about Fortis hospitals, right? So again, these are top things I would like you to read. I will provide a link of this report as well in the description box below in a drive. Download the report, follow the link, go through it. If you have any concerns, comment back and I will have a discussion on that with you, right? Again, we are aware of Blinkit being a part of Zomato now. Blinkit reported a contribution margin of 2.4%. So all these concepts would make more sense once we understand the business model of Zomato, right? So we may also look at it in our annual report in the subsequent uh, videos. I would love to talk more about its business model, how Blinkit was acquired by Zomato, how they work together, and how now we had even seen that they are planning an acquisition with a particular segment or the ticketing business entertainment segment of Paytm, right? So these are some of the sections here. The management or the analysts have tried to provide reasoning on why they believe the estimates to grow at this particular percentage, why they feel that the margins will improve drastically till we reach FY26 estimated. So this is more of an explanation or the key highlights or the strong growth outlook explanatory points to explain that why do they feel what happens in the food delivery business as far as Zomato is concerned. Key highlights from the company management commentary. So management would also have also provide some con calls, some earning estimations. They would have some vision, mission about the company's future performance. So these highlights are from the commentary provided by the management. Management has confirmed that Blinkit continued to be a faster evolving business with increasing use cases. You tell me, जब आप Blinkit से order करते हो तो क्या आपके डोर स्टेप पे कोई भी चीज मैक्सिमम 30 मिनट से ज्यादा लेती है? And also tell me if you have Blinkit services or not near your place of stay. Not every area might have the Blinkit facility, but nowadays it is becoming increasingly feasible for Blinkit to work on your mobile applications, and you can order any groceries online, right? And they get delivered within 10 to 15 minutes. And that is why Zepto came up with a tagline of delivering within 10 seconds, 10 minutes, right? Okay, so valuation and the view. Here, this is something I wanted to talk a little more about because the valuation is very subjective and depends on the expected returns that the company expects that the management or rather the analysts or the research reports that support the returns that would be expected out of the business. So if the company expects that the returns of this particular company would be greater or equal to 15% over 12 months, then they would recommend a buyer's rating. If they feel that the returns or the expected returns over the next 12 months will be less than minus 10%, then it will be a sell rating. It will be neutral if it is between minus 10 to 15%. So if there's a degrowth of 10% and greater, then it will be sell. If the returns are anywhere between 10% to 15%, then a neutral rating is provided. And under review means the rating may need a change and the research analyst is inconsistent with the investment rating as of now, right? Okay, so if you go through the report, you will also find the method using which the valuation was conducted. As we can see here, we have used the a future estimated EBITDA margin. So forward EBITDA margin is applied to arrive at the valuation metrics. The buy rating is provided, and the company has also been valued using the DCF methodology. So what is DCF methodology? DCF methodology is more about using an income approach based approach where we assume that the future cash payments or the future cash flows may remain stable and there is a discount rate we use to discount them back to the present value. So whenever a DCF is involved, there is an explicit period followed by a terminal period. There are assumptions to both what growth rate should be taken for the terminal period, for the perpetual period, and how much should be the discount rate to discount back the future cash flows to the present date. So that rate is called the cost of capital or the WACC rate. The terminal growth rate is given as 5% here, and the WACC or the cost of capital was calculated at 11.5%. Now the analyst has used the cost of capital instead of the WACC rate, which means there may or may not be debt in the business, which we may have to check. If there is debt, we would like to understand why WACC was not used and only the cost of capital was used, right? So there is a 18% upward potential which is expected, and fulfilling this criteria of greater than 15%, there is a buy recommendation that is provided by the analyst of Motilal Oswal. So this is a little bit of a brief on how do you start reading a report. I am sure that most of you are already experienced and have a lot to say, but try and understand that this video is more from the point of view of somebody who is a fresher and is reading the reports for a few times or is looking at it for the first time, right? So when you look at this graph or this table is nothing but it indicates the quarterly performance. So 1Q means the first quarter of second quarter of 23. Now, since this report is for the third quarter of FY24, we have compared the current quarter with the previous third quarter of the last year. So the present or the third quarter of FY24 is compared to the third quarter of FY23. It can also be compared to the last two subsequent quarters of the last year. So the quarter one of 24 can be compared to quarter one of 23. Quarter two of 24 can be compared to the quarter two of 23 again. And also try and understand that these two quarters together comprise as the half yearly revenue. So the half yearly revenue for any business will be the sum of the first quarter and the second quarter, right? Okay, so YOY change indicates the year-on-year change. It is nothing but the current year's revenue divided by the previous year's revenue minus 1, or it's the current year minus previous year upon the previous year, using which we have calculated the variance or how much change is there in the two quarters, right? And then because we were sitting on the third quarter of FY24, we have arrived at an estimated number for the fourth quarter. Now we also know the actuals, right? Because we have already surpassed the January, February, March of FY24. This report was prepared when we were back then in February and we did not know the actuals. Now that we know the actuals, you can also do a further analysis of comparing the estimated figures of the fourth quarter with the actual figures of the fourth quarter. So here in these two tables, we have arrived at the quarterly numbers of FY23 and FY24. Why is E mentioned? E is mentioned because we have taken the fourth quarter to be estimated and not actual. So this is compared, these two columns are compared on a annual basis and these are compared on a quarterly basis. So this kind of an analysis is something that is expected from a research analyst, because anyone can look at one annual report and gather information on the last 2 years of data, but it is important for you to gather information on the historical as well as connected to what the future estimates about the company are. So this again, followed by the revenue, we have the gross profit. Gross profit is nothing but revenue minus the direct cost. Direct cost can be the inventory of traded goods or COGS, employee expenses, delivery expenses, etc., which are related to the direct production of goods and services. We have the gross profit margin. If you look at it, then the gross profit margin in the third quarter of FY23 was 26.1%. However, in FY24, the gross margin has improved. This could be because of an increase in the revenue, which we can evidently see the revenue has increased from 19,482 to 32,880, or a reduction in the direct expenses, right? But the direct expenses have increased. So this increase in the gross profit margin is attributable to an increase in the revenue from these two respective quarters. Then we have some indirect costs involved, after which we arrive at the EBITDA. EBITDA is earnings before interest, tax, depreciation, and amortization. Depreciation is a charge on the fixed assets and must adhere to the wear and tear of the fixed assets. The interest would only be applicable if there is debt or there is some long-term borrowing in the business. Or we may also have to look at the annual reports to understand the nature of interest and to see what this interest relates to. Other income arrived from other non-operating activities of the business. Again, we can look at the further bifurcation of each component in the annual report, the notes to accounts. Then we have the profit before tax, before extraordinary expenses. There were no major extraordinary expenses, but still try and read the annual report first to understand this better. Tax rate is taken, so the rate of tax has been applied to arrive at the adjusted PAT. So now that we note the profit figures, we know there was a loss in the third quarter of FY23. However, there is now a profit of 1380 in the third quarter of FY24. We must look for the reasons for the same, right? Then the report also incorporates the overall business growth. There was a 15% quarter on quarter growth as compared to the last quarter of FY24. So we can see that quarter two of 24 से लेके quarter three of 24 में we have registered a growth of 15.4%, right? The second table talks about the improvement in profitability. When we talk of profitability, we include components such as EBITDA, EBIT, PAT, profit before tax. So profitability is nothing but the net income or the revenue minus all the direct indirect expenses incurred by the firm. So we finally arrive at the PAT margin improving from 1.3% to 4.2%, which is again a good source. Right? Again, the source is very important. So the source is the company or the management and the Motilal Oswal Financial Services Limited. So the company has done its own analysis of the financials and then arrived at this. So the source is that their research team has prepared these reports. Their research team has done the analysis based on the management inputs provided. So I would leave on for you all to understand more about the overall business, the food delivery business, the Blinkit business particularly, and how the inclusion or the acquisition of Blinkit impacted the company's financials. So this is a brief report on how you can get started, and I would love to talk a little more about it in the next video and continue on the discussion for the same. Till then, I would like you to have a better understanding of the report, and once you are through, you will be better able to understand a much advanced version of an explanation of the same. So I'll see you in the next video. Meanwhile, let me know if there was something you noticed as a part of this video and you want to highlight in the comments below, which I can take up in the next session. Thank you. Take care. Bye bye.